Letter D, a building that is vacant but is held to be leased out under one or more operating leases. So it doesn't matter if no one is renting it yet, class. If the intended use of the asset is already for rental, then that would already be considered as an investment property. Property that is being constructed or developed for future use as investment property. So even if it is not yet ready for use as an investment property, if its intended use eventually is for investment property, that would already be considered as an investment property. Okay, so please take note of letter E, class. For those who never read the textbook, for those who will never read the standard, they would think that there is a chance that this will not be considered an investment property yet. Okay. But for you who have encountered this even just once, class, it will already stick to you. So long as its eventual use or condition would be as an investment property, then that would be considered already at present as an investment property. Okay, make sure to remember, give special emphasis to paragraph 8 and paragraph 9. Paragraph 9, class, again, are the examples that are not treated as investment property. Okay, property intended for sale, understandable. Okay, the standard even tells us that it will be passed to that will be applicable. Owner-occupied property, okay, see PAS 16 or PFRS 16 under leases. Property that is leased to another entity under a finance lease. Okay, so as I mentioned earlier, if it's under a finance lease, it will no longer be PAS 40 that will be applicable. Because in reality, you are not just holding the asset for rental anymore. Now for paragraph 10, class, okay, so the treatment for an asset class that have dual use or multiple use, okay. Some properties comprise a portion that is held to earn rentals or for capital appreciation, and another portion that is held for use in the production or supply of goods or services or for administrative purposes. If these portions, class, could be sold separately, an entity accounts for the portion separately. So that's understandable. If they can be sold separately, then report the portion that is used for rental or capital appreciation as investment property and report the portions used for owner-occupied purposes as property, plant, and equipment. If the portions could not be sold separately, the property is investment property only if an insignificant portion is held for use in the production or supply of goods or services. Okay? Many students would get confused here, class, because of the manner this is being worded. Which one really has to be considered? Is it the portion that is used for investment property or the portion that is being used for owner-occupied purposes? Okay, so it tells us as a way of exemption. If it cannot be sold separately, the property will only be considered as investment property if the portion that is used for owner-occupied purposes is insignificant. Meaning, if the owner-occupied portion is significant, class, then the asset would be treated or reported as a PPE. Okay, so you follow whichever portion is significant, class. It does not even tell us, class, that if investment property is significant or whatever. It just tells us to look at it from the point of view, class, or to look at the portion that is being used for owner-occupied purposes. If the owner-occupied portion is significant, owner-occupied. If it is insignificant, then only then will it be classified as investment property. Okay. Paragraph 11, class, would also be a good source for situational question, class. An entity provides ancillary services to the occupants of a property it holds. So the issue here, class, is we were saying earlier that investment property gives you passive income. There must be no active participation on your part to earn profit. Okay? But paragraph 11, class, opens us to the idea that for properties that you hold for rental, class, it's possible that you will be asked to provide ancillary services. And the most common example here, class, would be when you provide security and maintenance services, class. Okay, you have a building that is being rented out to individuals. The question now is, if you hire security guards, if you hire maintenance personnel, will that stop you from classifying the building as an owner-occupied property? The answer is no, class, because the ancillary services that you provide are only insignificant. So even if there is to some extent participation in your part in the earning of the income, class, but that activity or that task is only insignificant. Okay? The standard tells us an entity treats such a property as investment property if the services are insignificant to the arrangement as a whole. Okay, so if you only provide security and maintenance services, class, then such kind of services is just insignificant, and therefore the building should remain as an investment property. Okay, in other cases, the services provided are significant. And the most common example here, class, is a hotel. So if your participation, class, in the earning of revenue or income is significant, class, just like when you're operating a hotel, class, there are a lot of services that you will have to offer, then the property is no longer held merely for earning rental, class. Actually, you're already holding it for supply of services already, class. Okay, so in that case, the hotel will already be considered as an owner-occupied property. Okay, so you weigh on the weight of the services you are providing. If it's only insignificant, then remain as an investment property. If the services you have to provide is significant to the entire leasing arrangement, then that will no longer be an investment property. Okay. Paragraph 13, it may be difficult to determine whether ancillary services are so significant that the property does not qualify as an investment property. The owner of a hotel sometimes transfers some responsibilities to third parties under a management contract. The terms of such contracts vary widely. At one end of the spectrum, the owner's position may in substance be that of a passive investor. At the other end of the spectrum, the owner may simply have outsourced day-to-day functions while retaining significant exposure to variation in the cash flows generated by the operations of the hotel. In this case, judgment is needed, class, in assessing whether it is an investment property or not. Okay? So, in those cases, class, where it is difficult to determine the extent of the services we are providing, whether it is significant or not, the standard gives us the freedom to make an assessment on our own. And in addition, it just tells us to make additional disclosures as to the considerations we have taken into account in classifying the property as an investment property or PPE. So that's why paragraph 13 and paragraph 14 will rarely be the principal issue in a question, class, because there is really no objective answer. Questions are more likely to come from paragraph 11 and paragraph 12 because the standard has categorically stated that if it's security only or maintenance, that is insignificant and therefore investment property. If it's operation of a hotel business already, class, then that would be significant and therefore no longer investment property.